into consideration the adjustments shown below. Did you hear that?
Yes.
Did you hear that?
Yeah.
Should I continue?
Yes.
Okay. I think you can all see the expenses incurred, so I'll just skip to the adjustments.
Yeah, sure.
Closing stock at 31 December 20x7 was £120,000. Accrued wages were £5,000. Rates prepaid were £500. The provision for doubtful debts to be increased to 10% of the debtors. Telephone account outstanding was £220. Depreciation shop fittings at 10% per annum and van at 20% per annum on cost. Did you all get that? Say.
Hello, colleagues. Hello.
Hello, sir.
Okay, let's try to quickly look on this one. What we are going to do, we should take care of this. We have got what we call usual in accounts. We have got we have got capital. Let me open another page. Let me write here. We have got what we call capital, revenue, expenditure, and capital expenditure. So what we need to do here, what do we mean by revenue expenditure? Or let's say revenue expenditures. Let's make this one revenue expenditures. What do we mean by the revenue expenditure? Because what you need to do when you are preparing a statement of financial position, or you are preparing a statement of comprehensive income, in this case our treasury profit loss account, you should make sure that you know how to classify the revenue expenditure and the capital expenditure. What are revenue expenditure? What do we mean by the way to revenue expenditure? Who can give us what do we mean by revenue expenditure? What do we mean by the word revenue expenditure? Revenue expenditure usually, we are talking about the expenditure, the day-to-day expenses of the business. They don't increase the value of assets, or they don't increase the value of our own business assets. But capital expenditure, they improve the assets or the value of our business. So the revenue expenditure, usually when revenue expenses, this one they should be in the what? On the trading profit loss account. So our trading profit loss account here, it consists of, we've got trading account. That's the first thing. Our trading account, many people they confuse there. We've got sales here. Sales here, they form for trading account. That is for TA, for trading account. Then we have got, usually the sales are affected by the sales returns. Well, there's some, so you need to know if there are sales, you should do less. Here it's minus sales returns, because some customers, they might return the purchased goods. For example, if we sell televisions, 20 television sets, one customer might decide to return such goods. So when the customer returns such goods, it means it's now a sales return, so it reduces our sales, so it is monetary value. So our sales is 400,000, then with less sales return, on this situation, we get what we call a turnover. That is what we call a turnover or a net sale. A turnover, or maybe they can say net sales. Then after that, these are what we are saying, they are revenues. If only they contribute to the ordinary cost of the business. So our major business is for selling televisions. So income which is generated from the selling of televisions becomes part of sales. But if we dispose a motor vehicle and our business is not concentrated on selling motor vehicles, it's not part of sales, but it comes other incomes. So we only calculate the profit or the loss made. Then you've got purchases. The purchases here, it can be reduced by purchase returns. By the purchase returns. The purchase returns here, they reduce this one. Before we go that, it's reduced by the purchase returns. Then this purchase, they can be increased by the carriage inwards. Carriage inwards. Carriage inwards. If you buy goods from South Africa, the amount you are going to pay the transporter to bring those assets or those goods to Zimbabwe is supposed to be included here on the part of the purchases. So you should know that is sales, then you say sales, then minus sales return, then you get turnover, then the figure here less cost of goods sold. Cost of goods sold consists of purchases. Then usually when you are doing our accounts here, we start by saying opening what? That is opening stock. Opening stock. Where do we get our opening stock? our opening stock, we get it here from the trial balance. This is the opening stock. We look at the dates. Dates are very important. Dates are very important. So here what we do, we take our opening stock from there. We take our opening stock from the trial balance. Because our day ends 31 December 2007, so automatically it means at the beginning of the year is 1 January, then the year ends 31 December. So it means at the beginning this opening stock, so take this figure 10,000 plus purchases 350, then you add carriage inwards if it is there. If it is not there, there's no any problem. That you are not told sometimes, but you should understand with that. If they were saying stock as at 1 January, you know that if your year ended at year ended 31 December, it means this one becomes the opening what stock. Are we together, colleagues? We don't want to see people mixing items. Carriage inwards, it's not part of they are not expenses, but they should be catered into the what? Into the purchase, into the cost of goods sold. Then the carriage outward, these are part of what? Expenses. Because, for example, bread distributors such as Lobels, Bakersfield, the entire expenses that when they are delivering a bread to the customers, that is carriage outwards. So we need to be very careful on this. That carriage inwards is part of what AD. Are we together? Then here we less here the opening what the closing stock. The closing stock usually you get the closing stock on the closing stock. You usually got the closing stock on the additional information as at 31 December. Your opening stock is as at 1 January 2007, and your closing stock is at 31 December 2007. So this one becomes your what? This one is your closing stock. This one is the closing stock. So this one, this forms part of our what? Gross profit. So our gross profit consists of sales, less sales returns. Then after that, we get a turnover. Then here, less opening stock, add purchases. Less purchase returns, add carriage inwards, less closing stock. Then you get what? You get the figure which you are going to get here. This one is cost of goods what? Sold. This one is cost of goods what? Sold. So cost of goods sold consists of cost of goods sold consists of opening stock, it consists of opening stock, add purchases, less purchase returns, add carriage inwards, less closing stock. That makes us cost of goods what? Sold. Cost of goods sold. So it's this one, turnover, these are revenues, less cost of goods sold, then you get gross profit. Are we together before we go further? Are we together?
Yes,
Hello,
sir.
class. Are we together before we go further? So that forms a gross profit. So then your figure it becomes a what? A gross profit. So gross profit is only made of this, consists of only this part. The major pitfall comes whereby the student they mix everything. when they calculate a gross profit, they will include wages and salaries, carriage outwards. Carriage outwards is not part of calculating gross profit. Then after we got gross profit, then we add other incomes. Then when we add other incomes might be consist of discount received if they are there, or a provision. So what you do, you go the provision for doubtful debt adjustment. These are big marks. You get small marks sometimes. Some transactions they only have a mark or a quarter of a mark, but big marks you can get here on the provisions for doubtful debts. We don't pick this figure as it is. We come here to the additional information. The additional information says the provision now for doubtful debts to be increased to 10% of debtors. To 10% of debtors. So we go here, then we look our debtors. Debtors and creditors. Debtors are on the debt balance, on the trial balance. So which means the debtors are 9,800 here. So if they are 9,800, then what you do, increase provisional for doubtful debts. What you are going to do here, you say you want to find out if there is an increase or a decrease. In this situation, you say 10% of debtors, which is 10% is 0.1. That is 10%, 0.1 multiplied by, let's say, multiplied by the debtors. Let's pick the data, say 9,800. 9,800, and this then becomes 980. So then compare 980, which we got here, 980 against 800. Then we find out here there was an increase because 980 minus the figure of 800, it's 100. So which means that our 100, there was an increase of 100. Then this one becomes an expense. But let's say, for example, our debtors here, let's say we're saying the debtors were increased to 5% of debtors. If there were 5% of debtors, 5% of 9,800, we're going to get 490. We're going to get 490. So 490 minus 500, 490 was going to be less than 800, which means that there was an income. So if there is a decrease, an increase is an expense. Increase an expense, then a decrease is an income. So in this situation, let's say, for example, our debtors may be decreased by 5%, which is 0.05 multiplied by, let's say it's been adjusted by 5%, then it says 0.05 multiplied by 0.05 multiplied by 9,800. Then here we are going to get 490. So for 490, when we are comparing 490 and 800, which means that 800 minus 490, then you say 490 minus 800. Therefore, it means on this situation, we have got a 310 decrease. 310 decrease. So a decrease, a decrease is an income. So this one should be added on another income. If you get a decrease, which means that other incomes you add provision for doubtful debts, a decrease, it means there is income. If it is an increase like here, because we're putting the provision, the accountant has placed them at 800, then they calculated to be 980, which means that 980 minus 800, which is for this situation, sorry, it's 180, sorry, it's 180. 280 means 180 is an expense. Are we together on this one? It's a major pitfall. Many students, they don't know how to do this. So they pick this figure as it is, which is wrong. If you pick this figure as it is in an exam, you get a 0 mark. The examiner will give you a 0 mark for that. Are we together? These are big marks. Big marks are given on adjustments. So you need to make sure that you understand and you do your adjustment correctly so that you can get, the examiner can award you the big marks. But if you don't want a big marks, yes, there's no harm. You can just ignore them, but you won't get as many marks as possible. You can get a very few marks. So big marks are obtained through the adjustment. Accrued wages. So here, accrued wages, if there's an accrual, it means these wages were not paid. So the examiner will award you for aware that the amount on the trial balance, 5,000, is not included on the trial balance. So the examiner will award you mark for knowing that 30,000 plus 5,000, that is equal to, so it means our accrued wages, which we need here, that is 35,000. So the examiner will award you maybe 1 mark for that, because you know the concept, the accrual concept. To say, we are saying whether revenues has been paid or not been paid, they should be recorded as the transactions in K. That is accrual concept. So when you are preparing a profit and loss account, it's different from a cash flow statement. A profit and loss account, whether the revenues or has been paid in cash, received cash or not received cash, they should be recorded as they are. That's the accrual concept or the machine concept. So here we have done with, but we need to use it again. So this one, it will be recorded again as a current liability in the statement of financial position. As a current liability in the statement of financial position. In the statement of financial position. Then, because it was not paid, it is accrued. Then rent prepaid, which means that the rent was what? So in our profit and loss account, we will record the 5,000. Rent prepaid, which means that there was prepaid. It means it was paid in advance. So once paid in advance, it's an income. Because we're using the machine concept, you did not use you were not supposed to pay, and the rate were not, it was not yet due, or was not supposed to be paid. So here again, what we do, we say, we come here $500. So we subtract, means we overpaid. What it means we overpaid 6,000 here minus 6,000 minus 500. That's what we're supposed to do. So our own figure, new figure, becomes 5,500. That is a new figure here, which we're supposed to record in our books. In our profit loss account, 500. But this rent, again, it should be treated as a current asset. The current asset in the statement of financial position or balance sheet. Statement of financial position or balance sheet. I said SFPA. So these are big marks which you are supposed to get. If you see given figures, normally sometimes they might not have a mark. They might have a very, maybe a fraction of a mark, maybe 1/8, depending on the examiner. So telephone account outstanding. Outstanding, it means it was not paid. So here it means if it was not outstanding, it becomes an accrued amount. So here we go again, say 1,000 minus plus, because we did not pay 220. Because on the trial balance, we don't write the accruals and the prepayments on the trial balance. Then here we get what? At the end of the day, we get 1,220. 1,220. That is our figure here, which we are going to write, because that is the amount which we need. So the big marks, they'll come here. You can get 1 mark, maybe here 1 mark, 2 marks. Maybe it is good about the person is good only about 12 marks or so. Then the others, they will be to any very little marks. So you need to understand these adjustments. They are very critical at this level. So if you don't understand this adjustment, it becomes a problem. Depreciate shop fittings at 10% per annum and van at 20% per annum on cost. On cost, it was saying at the amount which those assets were brought into use or when those assets were acquired. So when those assets were acquired, shop fittings at cost, it was 40,000. So then the calculation of depreciation here for shop fittings here, then you say depreciation debt for the year, for debt for the year. Then we say shop fittings. So for shop fittings, shop fittings. So our shop fittings on this case then becomes it costs 40%, so it's 10%, which is 0.1, multiplied by 40,000. In this situation, then you get 4,000. All amounts are in dollars or in pounds. So this is the depreciation for the year. And this should be presented in the profit and loss account, PL, for profit and loss. We need to present this figure in the PL. So you say depreciation, shop fittings, 4,000. So you pick 4,000 here. Not to pick 40,000. Because the only account for depreciation. Then we go on to the next one. That is then 20% per annum. So we go here, then we say then. So our then here, that is 20% per annum, that is equal to 0.2 multiplied by the then it costs 30,000. We are given here to say 30,000. Can you please admit your colleagues here? Then 1/5 of 6,000, which is 6,000 here. So the 6,000 will be recorded in the profit and loss. This is P and L. So on this situation, what we are saying, these are big marks. So you may get 1 mark for calculating, 1 mark for calculating here. So if you want big marks, you can get big marks here. 1, 2, 3, 4, 5, 6, 7, 8, 9, maybe 9 marks here. Then the other, the rest might carry a very few marks. 1, 2, maybe 8, maybe 12 marks here on the profit and loss account. The other 4 might be given maybe as a half or quarter. They won't carry much weight. So much weight would what? Then what we do here, we have got the. So we don't write, we measure P4. Some students, they will write 40,000 as an expense. This we don't write for the value or the cost of an asset as an expense in our profit and loss account. We only cater for depreciation for the year. Depreciation for the year only, not accumulated depreciation. Why? Because we are using the matching content. We want only the expense which was incurred in that particular period. For the period of 1 January 2007 to the period of 31 December 2007. That is the only amount that we need. So we only calculate the depreciation for the year. Then, bad debt 200, this one can be written as an expense. Then capital, we write it in a statement of financial position. Bank balance is an asset. We don't write here. It's an asset because it's on the debt balance. If it was on the debt balance, it becomes a bank overdraft. But in this case, it's on the debt balance. You should be very careful. Sometimes the examiner might be very tricky. When you write 3,000 on the credit balance, when the examiner writes 3,000 on the credit balance, it means it becomes a bank overdraft. So we need to be very, very careful. Then the drawings, 18,000. The drawings again, they reduce our capital in the statement of what? Financial position. So in brief, those are the key major elements which we might meet in the exams, which you need to get prepared. So can we have questions in area which need to be clarified? We need to discuss an area which needs to be ironed out. Area which need to be ironed out. Hello, class. An area which need to be clarified. You will find out that people, they might not have attended, but when the exam comes, find out people, they are now crying. They are saying the exam was difficult. And I'm now repeating for the second time, for the fourth time, and so on. We don't like that. When we give you these lessons, we're trying to help you so that at least you benefit. Any area which need to be clarified, because like what I said, to say you any more marks on adjustment, so you need to understand the accrual concept, the accrued revenue, how are going to do the prepayment, the calculation for depreciation, and so on. Any area which need to be clarified, an area which need to be looked upon before we go further. Let's participate, let's discuss. Let's discuss hello, class. Are we still there? Hello? Hello, class. Hello? Are we still there? Hello, are we still there? Hello? Hello, class? Hello? Coco, hello? Minashetu, hello? Shumirai? Hello, Shumirai? Hello? Hello, Shumirai?
Hello, sir.
Are you hearing me?
Yes, I'm hearing you.
Hey, you need to participate. I thought I'm lost because people they are complaining about the network. So you should
What
communicate.
problem, sir? I'm trying to participate.
So I'm trying to say, let's us check the solution here together. I heard that the Econet is not working. Some major network providers are not providing the service to us. So let me try here to share you with the answer here. Just look the solution. So I was asking to say if there is any problem here, we can able to any area which needs clarification, we can look on that area, we can hammer that area. That is very critical. Let's look on the solution towards 28.11. So like what we were saying here, are you seeing something?
Yes.
I know my network which I'm using now, I'm using a data cable, so it might be very good. Okay, this one, like what we were saying, discussion, just go around here. Our source 400,000, if we've said less returns 5,000, cost of goods sold 295, 39500, like what we've said here. Stock 811, 2007, 100,000, 8 purchases, let's return outwards. Then let's stock a 32, towards stock a closing stock at the end. This was a closing stock. Our closing stock here at 31 becomes 31 December 120. Gross profit, as we have said, wages rate 5,500. You calculated it. If you look from the previous person telephone, you calculated it. Bad debt as it is provisional 180. Depreciation we calculated all these. All these were well calculated. So we calculated all these. Then if you have got the balance sheet, because it was the first year, That's why there was no accumulated depreciation. That's why shop fittings. It means our asset, once you depreciate an asset, it will not continue remaining with the same value. So here shop fittings, it costs 40,000, depreciation 4,000, that's 36. Then it costs 30, depreciation 6,000, 6,000. Current stock, we pick the closing what stock debtors 9,800 minus provision of 980, which we calculated 10% of 9,800. Here we get this one from, that is the 10%, which is 0.1 multiplied by 9,800. That is where we get what this one. Because there was a provision of 10%, then the provision, it means our debtors, they will decrease in value because they are using the prudence concept. Prudence concept states that we should not overvalue our assets, but we should, and our revenue, but we should, in fact, understate them. That's the prudence concept. We don't overvalue our assets. We don't overstate the value of our assets. That's why we're using the prudence concept here. Prepayment is 500. It's part of our current assets. Then the bank, because our bank balance is got what? It's got a debt balance of 3,000. Then current liability, we said the creditors, this 7,000. Expenses accrued. These accrued expenses. We added those expenses from the telephone and from the rate that accrued what expenses. That is from the rates, the telephone. Then here we go on to net current assets. Here, financed by. Once our capital peak as it is, then we add net profit. Net profit, you bring out the figure which you are going to get from the profit and loss account, this figure. That is what we add. Don't copy your neighbor's the figure. We need your figure which you calculated on the profit and loss account. That is the figure which we want here. So which means that the net profit is 19,100. You are picking it from the profit and loss account. Then after that, we have got the drawings. The drawings reduces our capital invested. So if you make the drawings, either the drawings for stock or drawings for cash, they reduce the capital of our business. In this situation, the drawings were 18,000. So it means our figure is going to be reduced by 18,000. So that is just a brief idea of what should be done. That's a brief analysis of what should be done. That is the brief what and what we need to expect. Any question? It's just a revision, just to remind each other. Any question on this one? Any question? You've got any question you need to ask him? Because in many cases, the examiner, this usually is your number one in examination, such question like this. So you need to familiarize, you need to have a practice. Otherwise, you might face some problems. So it's very, very critical for us to make sure that we get a broader knowledge on this area so that you won't be found wanting in the examination. You won't be found wanting in the examination. Any other questions? The other Let me stop sharing here. Let me quickly look on this one again, which people might have some problems again. Okay, we want to look on the, I have shared something with you there. Here, want to look on the other area again, which people might face some problems. The area of preparing the trial balance. You find out many students, they face some problems here on the issue of preparing the trial balance. Who can read for us? Who can read for us there? We'll go step by step. Any volunteer to read for us? Hello, class? Any volunteer? Hello? Okay, saying Nyombe Private Limited started business on 1 January 2023. The following transactions were recorded in the month of January 2023. The owner bought an incubator worth 20,000, a delivery van worth 10,000, and cash 10,000 brought. So, which means that on this issue, we should open a capital account because it's a, he brought incubator. So incubator, once the owner brought an asset into the business from the person who has the business, it becomes the capital of the business and the asset of the business. So here incubator 20,000. So you should open a capital account, then you open an incubator account, then you open a delivery van account and a cash account. So here you're supposed to open 4 accounts, but in the capital account, in the capital account, we should include the 20,000, the delivery, and the cash on the capital account. The capital account, this was they've got a credit what? A credit balance. Then on January 2, the 10,000 cash brought by owner was deposited at Bank ABC Bank, which means that here the 2 accounts were affected in the cash account and the bank account. So our bank account will be deposited, will be debited 10,000. Then the cash account will be also credited. Are we together? Hello, class? Hello? Hello, class? Hello, are we together? Hello, are we together, class? Prudence. Charmaine. Charmaine. Hello, Charmaine. Hello, Kevin.
Hello, sir.
Hello,
Yes, we can hear you, sir.
you should acknowledge, because sometimes I think maybe I will be thinking that people they've got lost since we've got a network challenges from our major service providers. So you need to acknowledge. So let's look on, let's continue here. So let's continue
No,
here. Okay, so we are saying this on January 3, the company paid through the bank a total of 2,400, 12 months rent for the office at finance house. So if you are paying by bank, it means they should credit the bank account. Then $600 vehicle insurance premium covering 12 months, which means that $600 should be also you debit the insurance account, then you credit the bank account. That's a double entry system. So here it means the rent account should be debited by 2,400. Then you credit the bank account. That's the double entry system. Two accounts are affected. Then here $600 vehicle insurance, which means you should do a debit the insurance premium account. Then you debit the vehicle insurance premium. Then you credit the bank account what the bank is paying. Withdraw $500 cash and kept it in a safe, which means if you withdraw $500 cash and kept in a safe, it means the bank account should be credited and the cash account, not safe account, but a cash account, it should be what? The cash account is supposed to be debited. The company hired a manager and 2 general workers, and their combined wages in salaries were $1,200 per month, except for the manager who was. I'll remove this one so I can share you the next. Let's stop sharing this one. Then share the next. Then share with you the next one. Let me. Okay, he paid 800. Are we seeing the slide which I placed now? He paid $800 through bank transfer. The general workers' wages were delayed and paid on 5 February 2023, which means that these ones were accrued expenses. Because they were not paid. Then we go on to the next one. So $800 here should be what? Should be credited to the bank, and the wages account should be debited. That's the double entry system, because the bank is given the what? The wages account. Purchase the 5,000 chicks on credit from Ivan's Chicken for resale at 50 cents each. So you see 50 cents times 5,000, which is the $2,500. Don't say 5,000 chicks in an account. We use what we call the monetary value, the money measuring system. So it's 5,000 times 50 cents. We don't record 50,000 chicks in an account, but we put the 50,000 chicks in monetary value, which is 5,000 times 50 cents, which is $2,500. So it was on credit. So here we open a purchase account. We open a purchase account, and a credit account, because a creditors account, because we are not paying using cash. Then 4,000 chicks were sold on credit to Arandava the same day at $1 each. So which means that 4,000 times $1, which is 4,000. So this one we are supposed to prepare a sales account on this one. We're supposed to pay a sales to prepare a sales account. Then a data account, which is Ndaba, because it was sold on credit, it was not by cash, so the bank did not receive anything. Which means that for the purpose of double entry system, we need to prepare a data account, because Ndaba is our data. So a data account is not paid in cash. Then define the following terms, giving two examples of each. An asset, as we said, we've already done about an asset. These are the resources owned by the business, owned and controlled by the business. For example, we're talking about a bank, motor vehicles, equipment. These are some of the assets. Liabilities, we've got an obligation to settle. That is, we have got owing. It's a result of past events. We've got liabilities, which means that we've got a liability to pay the amount we are owing. Example of liabilities, examples are talking about bank loan, bank overdraft, creditors, accrued expenses. These are some of the liabilities. Record all the necessary transactions of the business from its inception, 31 January 2023, in the ledger accounts, then the trial balance. So I'll share with you the trial balance and these answers here. For asset, I'm not going to share with you. You need to go and research on what is an asset. You say asset are resources owned or controlled by the entity as a result of past events. So we need to define this one. Example of asset, they are simple. You can pick from the statement of financial position, which you have prepared earlier. Liability, the same thing. These are owings. If the obligation arises to which are supposed to pay because of the previous events. So there is a resource outflow. If a liabilities, it means there's a probable of the resource outflow in the future. Okay. I'll remove this one, then try to share with you again the answer. Answer here. Let me open here. All right. Let's check here from this one. Let's share from the screen. Let me share with you what's share from okay, sorry, I'm trying to upload the suggested solution. Just to be patient. Just be patient. Okay, hello. 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 Hello, class. Hello.
Yes, sir, we are hearing you.
Okay, so I just want to go through this, what we're discussing here. To say for capital account, I'll just quickly look on this one. Capital account, here we've got the incubator, 2,000 cash, 1,000 delivery, then the balance carried down. So this 40,000 should be written on the trial balance. Then you've got bank account. Bank account here was received 10,000 from cash. Then they paid rent on 3 January. Then they paid insurance on 3 January. Then they cash again. He deposited cash into a safe 500. Then the wages was paid 800. Then the bank account again, then you balance. So the balancing figure 5,700. That is the amount which we are going to carry out to carry to our trial balance. Because that is the amount which was available. So the bank, after it had received, it went on to pay these ones. So this is the debt balance and the credit side. Then the cash account received 10,000 as capital. Then the bank 500. This 500 here, double interest system, correct double interest system on the 5 January and here on the 5 January 500. Then the bank again is what is 10,000 on 1 January. Because the cash gave the bank the amount was deposited into the bank, so it means it was a credited. It credited the cash was credited and the bank was debited. Then the balance brought down 500, which was in the safe. Then the wages account. The wages account, we say they received from bank 800, so the balance carried down is 800. Rent account, it is bank, it received 2,200 from bank, then the balance carried down 2,400. So all this balance carried down is those are the amount which are supposed to record on your trial balance. All right. Any question before I move to the next answer? There are no questions. Let me remove this one. Stop sharing. Then I'll go to the next one. I will share again. Very sorry, I've been booted out. Maybe it was because of the network. Very sorry. So here, let's look on this one. On this answer again. That one we don't like it. Let's not share this one. Let's share the other one. Let's share this one. Oh. Yeah, this one. Let's finish off here. We've got insurance. Insurance again is still 600. Then balance brought down 600. Creditors received 2,500. Then Ivan 2,500 because Ivan is our creditor. Debtors Ndaba 400. Then balance carried down 4,000. Sorry, 4,000 for those chickens which were sold. Delivery then the capital 10,000. Balance carried down 10,000. Incubator 10,000. Then the balance carried down 10,000. Purchases. We did purchases here. I think 2,500. Balance carried down 2,500. Sales around 4,000. Balance carried down 4,000. Then if we've done this is our account, which I expect at this time is just going around through. Many of us are now able to, they can now able to work out this without any problem. Without any problem. Then let's check on the trial balance here. The trial balance, which is the trial balance comes simple. You take all the balance carried down. Capital 4,000, sales 4,000, purchases 2,500. Goes purchase from IBs. Then the bank, the balance which will remain was 5,700 here. We need to be very careful. Then the cash was 500, which we placed on a safe. Wages received 800 after having paid. The debtors from Ndaba, that was 4,000. Then the creditors, the 2,500 from the liabilities when we purchased our goods, we did not pay using cash from IP. it's our creditor here, right? Ivan. Then delivery run 10,000. It's an asset supposed to be recorded on the debt side. Then the incubator again is an asset. It should be recorded on the debt side. Then the rent 2,400. It's received. Then the insurance 6,000. Then you add these ones. As you know, as per rule, we do not record the accrued amount, the wages which were not paid there. This was supposed to be written here on the prepayment on the additional information. So our trial balance here is now balancing. So that is what we're supposed to do. So from this trial balance, now we can prepare the profit and loss account using this trial balance. And you can now prepare the statement of financial position, which is the balance sheet from this trial balance. So here we are just taking the closing balance, that's the which we record here on the trial balance. Any question? It's just a revision. So that as we revise, we don't want to waste most of your time because we've got lots of work to do. But you need to understand or to grasp these two concepts: the preparation of the ledger accounts, preparation of the trial balance, preparation of the statement of financial position, preparation of the profit and loss account. Those are some of the critical elements. Then you can also have to have a knowledge on the preparation of the bank reconciliation. You need to have to go and look on those areas again. Those are some of the key areas at the basic level, at the entry level of financial accounting 1A. Do you have got any question? So that will give people time to go and read, preparing for the other exam. Here we are just reminding each other on the keywords, on the key areas which people they need to look and to polish up in preparation for the final examination. Any question? Any questions? So if you don't have any questions, thanks for coming. I'll try to share with you all the learning materials and the recordings. Thanks for participating. Have a good day. If you don't have any questions, so that you have time to prepare for the examinations. But you need to look on these areas seriously. You need to take care of these key areas which we discussed today. And don't forget also to look on the issue of preparation of bank reconciliation. That's very critical again. Thank you so much. Have a good day.
Thank you, sir.
Thank you. You will find out that it will be helpful when you are revising, because you can now go through, you can now cruise. Sorry for the network losses. I heard there was a challenge. Econet and Net1, it was not people they failed to join the meeting because of the network problems. But we tried our best to record the meeting, so we share with you the meetings recordings so that everyone can benefit. Because with our due to always need to see everyone doing well.